Hello traders, this is Blake Morrow and you are listening to the week ahead video for December 2nd, 2018. A really big weekend and a really big week ahead, but before I talk about all that, I just need to mention if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. And once you sign up, which is just a couple you're just a couple clicks away, make sure you download the mobile app and you can load it onto your iPad or tablet. And this way you have all of our analysis, our chat rooms, our private community in your fingertips. So make sure you do that. Now, I do want to talk about this week because we have so much going on. So much had happened, and the big news over the weekend obviously was President Trump and Xi from China, the meeting that happened over, well, their dinner over the G20. It ended with a lot of positive remarks from both sides. Now, we won't get a press conference until I think at least Wednesday, because President Trump wanted to pay his respects to President George Bush Sr., who had passed away over the weekend. He was 94 years old, and we'll all miss number 41, as he was the 41st president of the United States. Anyway, out of respect for President Bush and his family, the press conference is going to happen later on this week, but we have got a lot of reports, White House press briefings, that the meeting went really well, and basically it's a truce in the trade war, and that is probably one of the best case scenarios we could have, because we're not going to see the increase of tariffs from 10% to 25% as we were going to see January 1st. It looks like we have a 90-day period of negotiation, and if a trade deal has not been reached, then this higher tariffs are going to take place, but that gives us some support in the near term. And really, if you look at equities, and let me take you over to the S&P first and foremost, and this is the basic technical analysis from the ForexAnalytix site. You'll notice that we closed above this trend line here, and because we closed above this trend line going into the weekend, you'll notice that we're coming right up into the 200-day moving average. We closed basically on the 200-day moving average. Going into the end of the year, you might see a little bit of risk appetite coming in, and FX Macro from my trading office had pointed out that there are going to be asset managers that are going to be chasing returns going into the end of the year. You look at the stock market, and the stock market is barely up on the year. Let me take you over to my S&P view. This is the charts that I personally draw. If you look at January 1st of this year, basically we are just slightly above, and you can see this right here. This is January 3rd. Here's the January 2nd, somewhere right there. You can see we're barely up on the year, but a lot of funds are down, and so to chase yield or chase return, going into the end of the year, that could put the stock market a little bit higher. And frankly, if looking at this view, if I had to give you my best guesstimate of where I think stocks are going to end up by the end of the year, I think it's going to be a little bit higher. So if you draw some sort of harmonic pattern, go out to about 127% extension, or maybe the 78% retracement, it's going to look something like this. Like the S&P is probably heading up towards 2850, 2875 by the end of the year. And if we're at 2760, I mean, you're talking, let's just talk about above the 200-day moving average, maybe another what is that, 3-4% higher, and that's pretty logical thinking about the seasonality of the stock market. We are in the December month. You get a Christmas rally, you got positive news between China and the US. Chances are that stocks are going to continue to rise, and like I said, we closed at the 200-day moving average. We're probably going to rally from here, and you're going to see dips being bought throughout the course of December. And obviously we're going to have to face the music, 60, 90 days down the road when we get close to this deadline and, seeing where China and the US sit a month or two down the road is going to be very important going into the beginning of the year. However, I wouldn't want to be short the equity markets, and I wouldn't want to be short risk. And that brings us to other analysis too, because if you look at the dollar, and let's take a look at the dollar index. The dollar index. Here's your daily chart. We've been following up this channel. You can see a nice channel in the dollar index. But what we have made is lower highs. Okay. Now we are making higher lows, which means that's a consolidation. That would be like more of a triangle. Well, what we're going to have to watch is basically the 97 level, which comes in right here. Okay, the 97 level, 96.80. If that trend line is broken, then that means the dollar is going to probably see some sort of bigger pullback, and then we'll start making lower highs and probably lower lows. Now, in a risk on environment, and if the market is viewing trade tensions easing, that's typically going to be bad for the dollar. So we're going to see dollar weakness as a result. Now, there's a lot of ingredients that make up the dollar index, and especially going in the next 2 weeks, we have this week the UK is going to be debating Brexit in Parliament, and then we have the very important Parliament vote December 11th, which would be not this Tuesday, but next Tuesday. That's going to have a big impact on the dollar index as a whole. So you might have to be a little bit more selective on how you trade the dollar, meaning not just trading the whole dollar index, but maybe trading, the euro dollar versus the cable, or maybe the Aussie. The Aussie is going to be probably a beneficiary, and so is the Kiwi, of this positive outcome of the G20 over the weekend. So if you look at the euro, and let's take a look at the euro dollar, the euro still has this inverted head and shoulder pattern. I know I've been talking about it for a couple of weeks, but we're probably going to gap up a little bit over the weekend, going into Sunday afternoon, Monday morning in Asia. We're probably going to gap up towards 113.50, maybe as far as 114, but really 114.50 is the big resistance. That is a 38% retracement. That is the neckline of this complex inverted head and shoulder pattern. It's complex because we have a lower right shoulder, a sloping neckline. So if we break above 114.50, that's going to be really bullish. Now if you look at the cable, it's a bit different view. I mean, the cable, here's the daily chart. I mean, we're in a bearish wedge, but if these Brexit debate is not going well, and we see that the MPs are all not real hawkish on on the new Brexit deal. There's a situation where the cable could break down. We're in a bearish wedge right now, but if we break below like 126.50, which 126.67 I think is this support right over here, we break through that support, it's gonna get ugly for the cable. So it's not going to be trading the dollar as a whole. You're going to have to be a little bit more selective on how you trade the dollar, because if you look at, like, here's the Aussie. I'll give you an example with the Aussie. The Aussie is right up against really key resistance, a nice trend line, horizontal resistance. We're probably going to gap higher over the weekend because of the China US talks in the G20. It looks like the Aussie, because we push right up against resistance, you can see relative strength. It's not even close to being overbought. We could be trading up here at the 200-day moving average, which would be above 74 cents going into this next week. We have, by the way, a lot of Australian data happening, which I'll talk about here in a moment. But the Aussie is up against resistance. You go look at the Kiwi. Here's another great example of a currency. Here's the daily chart. We're above the 200-day moving average. It's the first time we've closed above the 200-day moving average in the Kiwi since February. And, we're knocking our head right up against 69 cents. In my opinion, it looks like the Kiwi is going to probably around 70 cents at least. And it has been extremely resilient. And this stand down of China and the U.S. of these trade negotiations or the trade war, the stand down, if you will, the truce, it's going to release, some of the Antipodean type of currencies like the Aussie and the Kiwi are probably going to benefit from that. Now, one of the other currencies, I guess I need to talk a little bit about the dollar yen. We've talked a lot about the dollar yen and how resilient it has been. If you overlay, and which I did last week on the week ahead video, if you overlay the S&P and the dollar yen, you get a pretty strong correlation. But we've seen the dollar yen break away as the dollar yen has been resilient despite the equity markets being weak. We have really key resistance in the US dollar Japanese yen we have, first of all, this triangle resistance at 114, but key resistance around 114.40 to 114.60. You can see it's big resistance that's really plagued the US dollar Japanese yen since last year, early last year. We break above 114.60 in the dollar yen. I mean, you got to start thinking that the dollar yen is going to be trading up towards 120 in the coming months ahead. Now, if that happens, look at the other yen pairs. Let's take a look at the euro yen. The euro yen, for example, we've been in this really tight consolidation. That's a weekly chart. Let's go over the daily. Really tight consolidation. We break higher with the euro yen and stocks are moving higher. Yeah, we're going to be trading above 130 again, maybe up towards 131, 132 very easily. You look at the Aussie yen. The Aussie yen, extremely bullish. You can see how we're outside of this channel. Matter of fact, let me take you over to the Aussie yen as I see it, because I didn't do the analysis on the Aussie yen over the weekend. We have a bull flag pattern. We're right up against resistance here. We're probably going to gap higher in the Aussie yen. This little bull flag pattern points all the way to just sub 86 yen level. And that's not just the Aussie yen. Look at the New Zealand yen. This has been extremely resilient. We've been sitting outside of this a triangle that we broke out, or you can see it's a pennant. Pennants usually break in the direction of the previous trend, so the previous trend would be higher consolidation. We're probably going to trade up towards 80, 81 yen pretty easily. And again, this is in light of really a rally in equities. So if equities continue to push higher, and look at the weekly candle of the S&P, and I know it's a little messy right now, but look at the candle here. That's a huge, what we call it white, because there's white and black candles. We reference white and black candles in ForexAnalytix because, well, back in the day, there was just black and white printers. So you would have either a black candle or a white candle. So it'd be a white bullish candle. Yours might be green, whatever it is, but it's a big, big bullish candle. When you find a big bullish candle, and this is a weekly chart, it's usually followed by other big weekly candles in the same direction. So I would not be surprised that we see another strong week of buying, if not this week, maybe next week, as stocks continue to recover. So again, if equities continue to recover, those yen pairs look like they may go a lot higher. They do. And so if you take a weak dollar and weak yen, that really puts these yen pairs a lot higher. And again, I think the pound yen, you got to leave alone for the next week and a half until we get past this parliament vote. So let's talk about this next week really quickly. It is non-farm payroll week. So obviously on Friday, there's going to be Canadian and U.S. employment. If you're thinking about beginning of the week, well, we have the RBA decision on Tuesday morning, which will be Monday afternoon or Monday evening in the U.S. So we're going to have, the RBA. They are expected to keep rates on hold, but their tone of the RBA statement may improve based on the G20 negotiations. At least they're going to feel better about citing some hawkish developments in their economy. I think that's entirely possible. We also have Australian GDP Tuesday in North America or Wednesday morning in Australia. On Wednesday, we have the Bank of Canada rate decision. The market is expecting the Bank of Canada to keep rates unchanged. I wonder if they're going to feel a little bit more dovish based on the GDP readings that they got on Friday. But we do have the Bank of Canada rate decision on Wednesday. We have ISM data coming throughout the course of the week, and obviously we have ADP private jobs report that also happens on Wednesday here in the U.S., which kind of takes the juice out of the weekly jobs report from the BLS on Friday. But still, we have to respect that the ADP numbers are coming in on Wednesday. And then we have the Fed Chairman's Powell is going to speak again on Thursday. He obviously had some pretty dovish remarks actually on last week. So let's see if he changes his tone at all this week. He is speaking at a let me double check this. Speaking about the economy in rural America at the Housing Assistance Council's annual event in Washington, D.C. So should probably reference a little bit about the economy and possibly rates. And then obviously we have the jobs report on Friday. So it's a week chock full of data. Obviously, we're going to be watching the gaps and seeing how the market opens Sunday afternoon or Monday morning if you're in Asia. It's going to be a pretty exciting week with data and going into the end of the year. Remember, the next couple of weeks are pretty volume intensive for the markets as we get closer to the Christmas and well, just the holiday season in general. Towards mid-month in December, you're going to see the volume start to pare back a little bit, but that means for the next couple of weeks things are typically pretty busy. So guys and gals, if you really like this video, make sure you click like on the YouTube. Give us a thumbs up. That always makes all of us here at ForexAnalytix feel better about producing these free videos for you every week. But give us a thumbs up. Make sure you share it with other traders via social media, and subscribe to our channel so you don't miss any of our content as it comes through. And guys, if you didn't listen to Friday's interview with Ronnie Schlapfer that I conducted, which I don't conduct the interviews normally, that's usually for Dale Pinkert, but I did it because he's a personal friend of mine and mentor of mine. Make sure you go back and listen to that from Friday. It's an awesome interview, and I just want you guys to experience what a great person he is, and what an influential person he's been in the industry, in the FX market. So my name is Blake Morrow. I'm with ForexAnalytix. I hope you've enjoyed today's week ahead video. I'll talk to you soon. Thanks.